Hello, everyone. I'm Jerry D'Ambrosio, Manager of Educational Content with VectorVest. I've been with the company now 14 years, and I am heavily involved in everything that we do with regards to swing trading. Dr. David Paul and I have worked very closely together over the years, developing courses, teaching courses, and bringing you different types of swing trading techniques that have really found to be very effective. So my picks for today, I know we're running a little bit over today, so I'm going to be quick here with my picks. DR Horton and another gold stock, KGC. So I'm just going to highlight them both. We'll start with DR Horton. Just in terms of the analysis, it's undervalued. Current price 71.58. We value it at 93.41. It's got good RV. Glenn talked earlier about what RV is. The upside potential, so you got good upside potential over the next 1 to 3 years. Really safe stock, 1.47 relative safety. It's in an uptrend, 1.55 RT, good VST, which combines the three of those indicators. CI comfort index, a little bit above 1. It's favorable, which is good. They're earning $5.80 a share. We forecast them to grow that at 12% over the next 1 to 3 years. So nothing really wrong with the stock in terms of its analysis. Undervalued, good upside, safe, rising in price, solid earnings performance as well. Kinross Gold, a little different. It is undervalued. Current price 902. We think it's valued at 16, which is somewhat unusual for gold stocks. For the most part, gold stocks are overvalued. For the most part, I mean, the industry itself, the sector itself is generally considered overvalued because, like David said earlier, the gold is in the ground, the value is in the ground, and sometimes not yet mined, right, with a lot of these companies. But KGC, a little different. We think that we consider them undervalued, good upside potential, relative safety just a little bit below 1, not too far below 1, so at 0.99, that's fine. In a nice uptrend at 1.54, good VST. Really good comfort index at 1.55. They're earning 67 cents a share, which we feel they'll grow that at 36% over the next 1 to 3 years. Gold is hot. The building sector is hot. So, I always try to select stocks in strong industry groups, and both of these stocks are. If I scroll over to the right here, we can see, we can see that DR Horton, it's a building stock. They're builders, and Kinross is a mining company. Okay, so good industry groups there. If I click on graphs, I will move here. I'll start with KGC. So nice uptrend overall. We're looking at the last year. A nice pattern here of higher highs and higher lows, particularly over the last 6 months. This is a setup, guys, that I put together about a year or so ago. So what we're looking at is a 50-day moving average. That's the purple line. 150-day moving average. That's the yellow line. So an intermediate term moving average and a longer term moving average. What we look for is price to be above the intermediate term moving average. Also, obviously, would be above the long-term moving average. So intermediate term uptrend, long-term uptrend. I like trading pullbacks. So what we look for here is a pullback towards that 50-day moving average, which we see, right? We see a nice kiss of that 50-day moving average, just recently retraced off of it. Kind of the added piece here. So with the 50 and the 150, we're looking at an intermediate term moving average and a longer term moving average. I like to add another indicator to give me an idea of the short term trend, right? And I added stochastics to it. Well, first off, you could see that earnings per share at the bottom. Really, really nice, right? So we're adding another layer there of fundamental valuation to a more technical setup. And it really is a technical setup because the price retracing towards the 50. Stochastics is the indicator, which I love. I use it a lot. I added that for the short-term trend. And I just give myself a date line here. The kiss of the 50-day moving average really is your setup. The trigger for me with this type of a setup is the stochastics oscillator crossing from below 20 to above 20. You can see that happen. Let me zoom in here. You can see that happened Friday, and we're seeing nice follow through again today. So intermediate term moving average, price above that 50, also above the 150. I talked about the separation that I like to see between the two moving averages as well. That's just indicating, a strong trend, even with a pullback and a kiss of that 50. You got a nice retracement, stochastics crossing from below 20 to above 20. There's my trigger there. It's not the kiss of the 50. It's the kiss of the 50 is my setup, and the stochastics going from below 20 to above 20 is my trigger there. So looks like we got nice follow through again today. My stop loss, my initial stop loss is going to be the recent swing low here that I am entering off of. Also, if I draw a horizontal line here, you can kind of see that let me take off. Oh, that's the last close. You can see that the recent swing low is higher than a few of the recent highs here that we've seen, right around $7.73. And the recent swing low that we are pulling off of is right around $8.40. So a nice trend there, a nice strong trend. So that's why I picked that one. David?
Well, Jerry, I love the pick because gold is strong, and of course, my pet hobby horse, the Wyckoff Spring, is present there as well. The market pulled back, 3 weeks ago. It then went up, couldn't make a new high, and then came back and ran the stop losses of the previous low, and now it's moving up the page. So that's just a perfect low-risk trade where you're getting in at the extremities where the risk is least and the potential of reward is highest. So, yeah, that's just a cracking trade. It really is. So awesome.
Great.
I think I'll buy a few of those myself.
Right.
I like the two levels, again, of support. Between that level of support that you drew and the moving average, I think that that helps to increase the confidence in the trade. Now you look at today, and this is what happens a lot when we talk to people. Well, the trade's not doing anything today. Get out of your own way. Let the trade come to you. Everything, the setup is there, the trigger is there. Be patient. And from a swing trade perspective, you don't have to make a decision today and say, I'm going to get in and get out today. That's the beauty behind the swing trade. All of these trades that everyone is doing here is showing some semblance of a trend. If you're going to swing trade, you need some semblance of a trend, whether it's moving averages, whatever it is. That trend is going to keep you sane and keep you from jumping all over the place. But I do like the combination of both of those levels of support, and as David said, as a springboard, or however you want to call it, it's moving up, and there's a method to the madness, and that's what makes it all about. What makes it well worth it.
They stole Glenn. It takes them a while to get out, because and somebody once told me a long time ago that 80% of the points are made in the last 20% of the time of the trade. So what happens is that the darn thing does nothing and nothing and nothing and nothing. And then in the last 20% of the time it takes to get from A to Z, it makes 80% of the points. If you've ever done any day trading, which I know you do in the room in the morning, you'll find frequently that the market starts to move about a nanosecond after you've decided it's never going to move and you leave. Then it flies. So a nanosecond is a very small amount of time. It's the amount of time it takes in London for the traffic light to change to green and the bloke behind you blaring his horn. It doesn't take very long. That's always helped me stay in trades. 80% of the points are made in the last 20% of the time of the trade, and it takes a great deal of strength to actually just hang in there.
Scott is asking about the target for KGC. It would be the recent high here, right around $10 and change, and the support level here at about 825. Maybe 830 would be your initial stop loss. I like what David said, take half the profit off, move your stop up to entry, and let the rest run. So most recent high here would be your initial profit target. Look, if it blasts through it, great. But if you see any hesitation in here, you can see the doji here on August 5th. Any hesitation at that recent high, you take half the profit off the table, move the rest to entry, and let the rest run. All right, so DHI. DHI would be what Glenn considered earlier more of a setup trade. I'm not really ready to pull the trigger, although earlier in the day, it actually looked pretty good. What I'm looking at here is a 20-day moving average. It's a simple moving average and a 14-period ADX. This is a trade this is a setup called the Holy Grail, developed by Linda Ratchke, something we teach in our Trade Like a Pro course. So what I liked about it was the recent pullback towards the 20-day moving average. Earlier in the day, it was actually up a little bit, so that's one of the reasons why I chose it. Still looking at a relative indecision today, but the 14-period ADX comes into play when the stock is trending, okay, and right at the pullback, or as soon as the pullback begins towards that 20-day moving average, what we look for is the 14-period ADX to be at least above 30. That indicates a very strong trend. That gives you an indication that the pullback will likely be just that, a pullback, because again, the trend is so strong. Price kissing the 20-day moving average is the setup here. Okay, so while I'm not ready to pull the trigger yet, let's kind of wait for the day to finish. What I like though is the kiss, the hesitation right at that 20-day. Let's say that price closes relatively where it's at now, 71.62. Price goes above 72.63, which is the high of today. If that happens tomorrow, that would be my trigger. Okay, so confirmation, about 12.5 cents is generally what I like to use. Above the high of the kiss candle, there's your entry. All right, and the stop loss is going to be really tight. Is going to be the low of the reversal. Yeah. So the low of today was $70.84. If I enter, 12.5 cents above the high of today, which was 72, let's say it's 73. My initial stop loss is $70 and let's say 70 cents, just about 12.5 cents, 13 cents below the low of today, really tight. And my initial profit target is the high, 77.45. That's where I'll look to take half my profit off. And let the rest run. So a really simple setup here, just price trending higher, strong trend with the ADX above 30, pull back towards the 20-day moving average, kiss of the 20-day moving average. Tomorrow I'm going to need to see price go above the high of today, 72.63, before I enter the swing low, right? So let's say price moves a little bit right in this area here tomorrow, right above the high. Well, now we have a swing low form today. That's going to be my initial stop with the most recent high as my profit target.
I like the quick get out because if the trade is pulling back for the last few days, and do me a favor, Jerry, put CI on there. I bet you CI is relatively high. That's what I'm going to think because I don't think this stock pulls back a ton. It's above one. I'll take that.
Just crossed above one, actually.
I like the quick get out because as a setup, you don't want to be in no man's land. You get in and go, okay, what do I do now? I like the current day's low as a way to get out because if it's not doing what you wanted to do quick enough, get out, look for another trade. That helps to mitigate losses real early. If the stock does tend to bounce off of that 20, you got good upside to that level of the high, which would be a good swing trade. Remember, all of these trades are a couple of days to a couple of weeks. Some of them could even be longer. Don't limit yourself if the trade is running. But the general gist of a swing trade is a couple of days to a couple of weeks. But I do like the early get out just in case so that you're not stuck there going, well, what do I do? And having a plan is so important. David?
Yeah, well, I if you could just blow it up, if you would mind, Jerry, a little bit to the last 3 months or so, or 3. It's very simple-mindedly. The share was pulled back to the last old top, which was that red candle just there, and that's where anybody who's bullish on Horton will be buying it. Every Wall Street dealer will be looking at it at that point. So that is quite important for me there. And the other thing that would be useful to put on would be a volume chart to see how the pullback happened, what sort of volume it pulled back on.
There were some buyers. There were some sellers. There were some. No, maybe not.
Price rose on rising volume, and price has been rising and rising volume on this, and it's pulled back. Maybe not as dry up a volume as I would like. Certainly, there's no volume going into it today. Mm-hmm. I like it around these levels. A nice big green day tomorrow that engulfs today. Today the price action today is really, really, really tight. Mm-hmm. That's a good sign as well. So
right at a moving average, especially.
Yeah. Give it another day.
Absolutely.
And I think there's a trade there. Yeah.
All right. So, thank you all for being here with me with these stocks for this panel. I think that a lot of people out there found some stocks that potentially are things for them to look at. If you've got some swing trading money, remember, this is not for your full-blown retirement account. This is for trading. Maybe not day trading, but the swing trade, we've already defined what it is. You've got some great candidates to look at, and that's the reason why you come to these hot stock panels. So again, JD, Jerry, thank you for being here. Dr. David Paul, I thank you for all of the, I wanted to put testicular fortitude in there somehow, but it just didn't work. So I know you did.
Didn't fit, huh?
It just didn't fit. I left it alone. But every time I hear you speak, I wait for you to say that at least once. That makes my whole day of you being here. So thank you guys for both being here and for your insight.
Pleasure.
All right. And
Great pleasure, Glenn.
I think Joey's going to turn them off or not. Are you going to keep them here?
Yeah, definitely stick around.
All right, so stick around. Don't go nowhere. Don't turn off your camera. Yeah, but don't do anything you don't want nobody to see you on camera either. So I just tell them putting that out there. What, do we get ready to say, Jerry?
Good. I got a webinar in a little bit, so I might take off.
All right, then so be it. Again, adios, my friend. It's good seeing you.
You too, my friend.
All right.
Cheers, Jerry.
Take care, David.
All right, real quick,
Cheers, man.
last couple of things I need to wrap up with. Who won the cup? Who won the mug? I can see the chat on my phone now. Huh? Harry?
Albert.
Harry Albert. Harry Albert won the mug. Congratulations to you, Harry. Thank you for being here, supporting the channel, and we're giving you out a mug today. So I see Leonardo says, great information, well-experienced professionals. Thank you for that. Jay says, thank you, David, Jerry, Glenn, and Joey. Thank you for that as well. Ron says, thank you, panel members. So I'm glad that you guys enjoyed it. David, they all enjoyed you as well. I will add, we are going to be talking about a webcast coming up called the Options Jumpstarter course for any of you who are interested in learning options. We have a course called www.vectorvest.com/options. It'll take you to this website. Joey will put it in the chat for you as well. The Options Jumpstarter is all about getting a basic understanding of options. If you don't have options as a part of your tool belt, you need to. All right, it is a definite way to help you to play the markets both to the upside, to the downsides, but more importantly, to play options for protection. There's a lot of opportunities when the market goes down or your stock goes down, and you really don't want to get out of it. Having options is a great way to protect your stock plays without having to get rid of them. It's a play called a covered call. So the beginner's guide to profitable options trading is going to look at basic options, calls, puts, covered calls. Go to that link, sign up for it. It's a webcast. It is a webcast. It is free. Before everybody starts running, it's free. It's free. Just learn. Have an open mind and learn what you can add to your tool belt of investing. Everybody's here to want to make more money in the market. Don't run from an opportunity to do just that, just because you're scared. All right, so I'm just putting that out there. As I mentioned as well, Joey is going to put a link again in there. If you want to take advantage of this software that we showed today, the VectorVest software, there's a link for 99 cents for 30 days. Folks, you're going to get everything that we showed here. There's nothing add-on. Everything, those graphs that we showed, that graphing package is bar none one of the best you will find in this industry. It is so flexible to accommodate exactly what you're looking for and to give you the answers that you need. Always is not going to give you the answer that you want, and that's good. Take the answer that you need and let the graphic package give you the answers that you need. We track over 19,000 stocks globally. We time the market. When we talk about timing the market, it's not about trying to find out which way the market is going to go. We keep you on the right side of the market. And as David talked about, a timing signal called the DEW timing signal, ideally useful for swing trading. And all of that is included in that 99 cents for 30 days. The link to the podcasters is www.vectorvest.com/YT for YouTube. So for those of you who are on listening by way of the podcast, www.vectorvest.com/YT. You get the software, the desktop software, desktop version of the software for 99 cents for 30 days. And don't forget, next Thursday or this coming Thursday, we will be here again on YouTube for Trending Thursday. If you subscribe to the channel and hit the bell icon, you will be alerted to all of the upcoming content. David puts content out every Friday for the UK market, but he's got a lot of insight into what's going on in the market. Our YouTube channel is growing, and it will only continue to grow as far as you support it. So if you like this content, please subscribe to the channel. All right, with that, once again, I'm going to say goodbye to David. David, once again, thank you so much for being here. I love the insight that you give and the information that you open up to people who are not aware of it. You do them a great service, and it is my honor to have you here on this YouTube live as well.
Been a pleasure, sir. Thank you.
All right, and with that, folks, we're out of here. Adios, arrivederci, ciao, au revoir, sayonara, salam, shalom, namaste, adios. We're out.